Okay. All right. Hello, everybody. I hope you're doing well. Thank you for coming today. It's good to have you. I hope you're enjoying the summer. I am. So in any case, let's go ahead and get started today. Very exciting new topic, and it's going to be followed by this very exciting legal disclaimer. So today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So today our guest is Colin Abrams. This is the first time I've had the opportunity to listen to Colin and have him do a talk with us. I'm sure he's done some in the past, but this is the first one I've moderated. I'm looking forward to it. Colin has been a good business partner of Metastock for a few decades now. 2 or 3, and he does a great job of training people. And so today he's going to talk a little bit about a simplified Dow theory. I'm excited to see it. I'm glad you came. I think it's going to be great. So Colin, that's the introduction you get today. You're welcome to fill in some of the bigger details or anything you want. I did just turn the screen over to you, and I can already see your screen. So.
Okay, great. Thanks, Jeff, and thanks for hosting me. It's a great honor to be here. All right, welcome, everybody. So I'm going to talk a little bit about Dow theory and how to make money with it, basically. And the whole aim of trading, as you know, is to make money. And Dow theory is one of the oldest theories of technical analysis. In fact, Charles Dow, you may or may not be aware, is the so-called grandfather of technical analysis. He lived in the late 1880s, and he was the founder and the editor of the Wall Street Journal. So most of what he wrote were in editorials in the Wall Street Journal. Now, I'm not really going to go into the main tenets of Dow theory. I just want to stick to the really practical parts that we know that we need to know from a practical trading point of view. Aspects of the theory can get quite complex. For example, comparing the Dow Jones Industrial Average to the Transportation Index for signals at the same time, or non-confirmation signals. All that's not really relevant from a practical trading point of view. I'm going to basically just show you what constitutes a basic Dow theory buy and sell signal. And then we're going to look at some charts and look for those actual signals. And I'm happy to take any chart that you want to look at. I don't want you to feel that I'm handpicking my examples. So whatever charts you want to look at, I'm quite happy to do that. So let's just look at the main Dow theory signals first. And really, what I've found with 30 odd years of trading is that the best methods are those that are simple. Just keep it simple. The market is a complex enough mechanism animal as it is. So, you don't want to add another complex method to something that's already complex. So, I've just found after years and years of doing this, I keep coming back to the simple methods. It's the simple methods that still work the best. And Dow theory is pretty much as simple as it gets, but highly, highly effective. And we can look at any chart you want on any time frame. You'll see how effective this method is. And it's really not difficult. Really, anyone can use it. So, let's start off with the Dow theory sell signal. Now, this chart on the left-hand side, can you all see it? I assume you can all see it. This is your basic Dow theory sell signal, and then we'll look at the buy signals after that. So, your basic Dow theory signal is if the price zigzags up to A, down to B, up to C, C makes a lower high than A. That's critically important. The fact that C couldn't make a new high is already telling you that the buyers are running out of steam and the bears are coming in, the sellers are coming in. And then when it drops to break below point B, in other words, 1 cent or 1 tick, or one pip below point B, that'll be your confirmed Dow theory sell signal. So what you need is a lower high and a lower low. A lower high and a lower low. It really looks like a zigzag or like a lightning bolt if you want. That's all we're looking for, lower high and a lower low. it's important to note that at a market top, you need your lower high first. As I mentioned, the fact that the price wasn't able to push up to a new high is telling you that the sellers are starting to come in. And then as soon as it makes a lower low as well, that's your sell signal, 1 cent below point B. And the reason why that's your sell signal, because in technical analysis, a trend, an uptrend is defined as a series of higher highs and higher lows, and a downtrend is defined as a series of lower highs and lower lows. So the very first time that condition is met, that's really, that's really, I'm just trying to draw something in there with a drawing tool. Give me a second here. Yeah, 1 second. I'm not quite sure what's happening with the window here. All right, let me maybe just leave that off. Jeff, I'm seeing myself here on the video. Not quite sure how to take that off. 1 second. Let me just try. I'm not quite sure why I'm seeing that.
We can see you. I usually just hide it behind something so that it's not in my direct view.
Okay, for some reason it's not going behind the rest of it. Can I click the X on the picture, the video of myself, or will that take it off?
I think it'll be okay if you click on the X of yourself.
I'm not sure why this is very strange. I'm not sure why the PowerPoint isn't coming on. Just help me here, Jeff. I'm not quite sure why this has happened.
Okay, what are you trying to do?
So I'm seeing myself, a video of myself, and it's busy covering my PowerPoint presentation.
Oh, I think I'm just gonna
trying to take myself off.
Yeah,
we can do that.
I turned off your camera. It was the easiest way to do it.
Okay. Okay, good. So can you see the PowerPoint slide again?
Yes, we've been able to see it the whole time.
Okay, you have been able to see it. Yeah.
Mm-hmm. Correct.
So as I was saying, sorry about that. As I was saying, a downtrend is a series of lower highs and lower lows in technical analysis. An uptrend is a series of higher highs and higher lows. So we're looking at a Dow Theory sell signal right now. So the very first time that condition is met of a lower high and a lower low, I'm just drawing this very loosely, is going to be our Dow Theory sell signal. In other words, we don't need to wait for 2 or 3 lower highs and lower lows to get our sell or our short signal. The very first time you get a lower high and a lower low, that's your short signal. So going back to the actual signal then, I don't know why this keeps freezing my PowerPoint. Jeff, not quite sure what's going on there. Yeah, it's not going back to the PowerPoint.
Okay,
any advice here, Jeff? I'm not sure why. In fact, my whole PowerPoint is sort of frozen, even if I try and open Metastock. Any idea what that might be about?
You're using the annotation tools in GoToWebinar?
Yeah, yeah.
Okay. I'm not 100% familiar with the ones that are in GoToWebinar, but I think there is a race-all drawing setting.
Yeah, I did that.
Will take off all the drawings. I do still see your PowerPoint, but it still looks like it's in like the drawing mode. And I may, I might be able to turn that off for you too.
Okay, for some reason I'm not able to open any of the switch between the windows in my PC, which is very strange. It seems like it's stuck on the drawing mode. Yeah,
because it feels like you want to draw. Yeah, so I don't have the access to the drawing tool, Colin, but on there, is there a leave drawing mode?
Okay, yeah, you're right, drawing mode. Okay, so it's just a few teething problems. Okay, so just getting back to the Dow Theory sell signal, we've got a lower high at C, which is lower than A, and then 1 cent below B is your sell short signal. Now, this is on a line chart. It's just easier to show on a line chart. You could do this on a candle chart or a bar chart, the same thing. On the right-hand side, don't worry about that for now. That's just a variation of this. But that is your Dow Theory sell signal. Let's look at the Dow Theory buy signal. So it's the exact opposite of the sell signal. You've got it zigzags down to A, up to B, down to C, and then up again. Now, you'll note C forms a higher low than A. So that's very significant. The fact that the the bears couldn't push the price down to a new low is significant. It then moves up, and 1 cent above point B is your buy. B1 is your buy signal. 1 cent, 1 tick, 1 pip above B is your buy. So you've got a higher low and a higher high. It's a zigzag. You can all see the zigzag, or you could call it a lightning bolt. That's all you want. That's your basic Dow theory buy signal. Again, don't worry about this on the right. It's just a variation of that. Important to note that at a market bottom, at a price bottom, you need your higher low first, point C, and then you look for your higher high. Okay, so point C must come in. The fact that the sellers couldn't sell it to a new low is significant. And then the buyers were strong enough to push it up to a new high, gives you your buy signal when it breaks point B. So those are your most basic Dow theory signals. There are variations of this, but that is really just the bottom line. And really, I should call it my adapted Dow theory, because it's not pure Dow theory. I'm not comparing it to the transportation index. And I'm also using this on any instrument and on any time frame, not just obviously on the Dow Jones Industrial Average. So those are your basic Dow theory buy and sell signals. In terms of the buy signal, as I said, an uptrend is higher highs and higher lows. So the very first time that condition is met of a higher low and a higher high, that's going to be our buy signal. We don't need to wait for 2 or 3 signals later. The very first time it's met, that'll be the buy signal. So I call it my adapted Dow theory because I've added a few of my own touches to it. So it's not pure Dow theory. I've added a few filters and a few additional technical elements just to make the signals a higher probability of working. And I'll show you some of that right now. And I'll also show you the how we can scan for Dow theory signals on the Paragon toolkit. Jeff, I don't think you've mentioned that yet, but that's something that I've developed together with Metastock, where we can actually scan for the Dow theory signals. We've got expert advisors that can highlight when the signals come up, and that works on any time frame. So I've just got the cues here. The NASDAQ, the NDX. This is just a daily chart of the NASDAQ. And so I'd like to really demonstrate this on a line chart, just because I think it's easier to teach. And the truth is, I actually prefer for my own trading to do it on a line chart as well. But you can do it, as I mentioned, on a candle chart or a bar chart. So I think for now, I'm going to just take the moving averages off. We don't really need that right now. I just want you to understand the concept here first. So just start at any significant bottom. Take this low here. This was in mid-May. And you can just see by looking at this that the price, an uptrend, the price zigzags up. A downtrend, it zigzags down. And that's just the way prices work. This is just the law of prices. What we're doing here is we're just capitalizing on the way prices actually do work. Not the way anyone says they should work or thinks they should work, but the way they actually do work. It's just a basic universal law of price action. In uptrends, you get zigzags up, and in downtrends, you get zigzags down. So if we start at our first, at the significant low over here, the first signal, the Dow theory signal, will be when it breaks this high here. Why? Because we had a higher low. Firstly, it was zigzagging down. It made a higher low, which is significant. And then as soon as it breaks this point here, that's our buy signal. So because this is a line chart, you'd enter on the closing price. And that would be your buy signal. You could do it on let's just put it on a candle chart, see what it looks like. Okay, the candle chart, you would actually get an intraday signal when it breaks that high over there. So the benefit of using a candle chart or a bar chart for this is you'd be able to get in intraday 1 tick above that high. So it's like A, B, C, D when it breaks that point B. I still prefer it on a line chart. I just find it clean and simple, and it works well for me. So you'd get in when it closes above this point here, and you'd catch a trade up to there. I don't know, can any of you see the exit signal here? The exit signal would be a Dow theory signal in the opposite direction, which it looks like that point there. Let me just make 100% sure. Exact level, 1365. Is it? Let's just see that. I'm going to have to just go in to see exactly 57 to 54, yeah. So that's slightly before that point there. So we had a lower high there, very subtle, and a lower low there. So you take profits there. So in other words, you bought there and you took profits there. Nice, simple little signal. Okay, not a massively huge profit, but not bad either. From about, what levels here? From about 13.5 to about 13.650. So it's 150 points on the NASDAQ in about, that was about 2 weeks. So then you get a lower high and a lower low. Now, technically, that would be a short signal as well. I don't take that signal because I've introduced a few filters, like, for example, trading in the direction of a moving average. So for this, I like to use a 20-period moving average. And if the price is above the 20, I'm really looking for buyers. I'm going to ignore shorts. And the price is above the 20 as well. So that would be, I wouldn't short over there. Technically, I might not even have taken this buy signal either because it was below the 20, and in reality, I probably wouldn't have for that reason. There are times when I would take a signal when it's below the moving average. I'm not going to go into that now. Maybe we'll be able to discuss that later. But I have added, a few subtleties to make this work even better. So one of them is the moving average as a filter. So I wouldn't take that short. I'd now wait for my next buy signal. And that would be over here when it takes out this high over here. Because if you zoom out, on a slightly higher swing level, you got a AB, you got a move down there, and then when it takes out that point there, you've got an ABCD and a new buy signal over there. Okay, so that's 13,720. I'm going to let me just take all the lines off. I don't want to confuse you. So in other words, what I'm doing is on this time frame here, on this swing level, A, B, C, D, when it takes out that high, that's my new buy signal. And you can see it just kept zigzagging up. I'd still be long in this trade. That trade was entering at about 13,760. The NASDAQ closed at 14,722. That's the NASDAQ 100. So, it's a massive move already, just based on that signal. 13,780 to 14,720. So that's almost 1,000 points on the NASDAQ. And that's in the space of about a month. So that's a wonderful move. Now, what you could do as well is, if the move is continuing nicely, you could add to it if you get another Dow Theory buy signal, which we had over there. So you'll see we had A, B, C, D. When it breaks at point B over there, you can enter again a second time. In other words, you could add to your position. Or if you missed this first trade, you could get in over there. Pulls back and it keeps zigzagging up. So we'd still be in this trade. My recommendation would be not to take more than the first 1 or 2, maybe 3 signals in the trend, because obviously the longer the trend is in place, the closer it is to ending. But the first 1 or 2 or 3 signals are worth taking or adding to your positions. Longer than that, beyond that, I would just hold what you've got and tighten your stops. So those are your basic Dow Theory signals here on the NASDAQ. In terms of taking profits, you could either wait for a Dow Theory signal back in the opposite direction, which would look something like this. If I had to just draw that in, let's just say for argument's sake, if I did that and then that, then you'd have a lower high and a lower low. And when it took out that low, you'd take profits. There are other ways of doing it. You could just draw a trend line, something like that, and it closes below it, take profits. Doesn't really matter, because either way, you're showing such a nice profit here that you're basically just using a trading stop to get out, to take your profits. You could bring your stop up to each successive pivot low, swing low. That's another way of doing it. And that's really up to the individual trader. So that's really some nice signals at the moment on the NASDAQ. You can see here when it was in a downtrend, we got a lower high there and a lower low. Just draw that in. So lower high there, lower low. I'm just drawing this line loosely, and there would be a short signal. Another one there if you wanted to go again when it broke that point over there. Because the general trend has been pretty strong, I'd probably only just take the first short if I was going to short on that one. And another way of doing it is just have a set number of points profit that you want to take, or dollars profit if you're trading a stock. And just take profits there, or take half profits regardless of what happens next. Bring your stop up to break even on the remainder so that you can't lose on the trade. And you've guaranteed yourself a locked in profit on the first half that you've taken. Okay, so that's just what's happening at the moment on the Qs. I mean, on the NASDAQ 100, you can do this on intraday. I personally like doing this on the higher time frames. The reality is that the big money is made on the big swings, and I think that's just a basic principle of reality of the markets. Sure, you can make money trading intraday. There's no question about it, but you're going to be taking smaller price swings just by the very nature that you're trading a much smaller time frame. I prefer doing this on the higher time frames. I don't necessarily have the time either to be watching the market all the time intraday. So I like doing this, let's say on the weekly chart. This is a weekly chart of the NASDAQ. And if you just start from this significant low here, the COVID crash low, you had your first buy signal there. So a higher low and then a higher high. You can see that the higher low can even be quite subtle. Small little pullback gives you a higher low and then a higher high. So breaking out above this point is your first buy signal, which would be roughly around about 7790. And you can just see how this just kept zigzagging up. I mean, this is, as I mentioned, just the basic law of price action. This is the way prices work. This is the way trends work. Higher highs and higher lows. It zigzags all the way up. So you could have bought there, or you would have bought there. And on the weekly charts, I wouldn't necessarily use the moving average filter as much, particularly if you've had a big sell-off. And that's some of the subtleties I discuss in my course, on the weekly and even the monthly time frame. If you're a long-term investor, you don't need to use the moving average filter. It's not as necessary. Certainly on the short-term time frames, the intraday, the moving average filter is essential. So there's your first buy signal. You could have taken another one over there. You can see a higher low and a higher high. I hope you can all see that. I can't see you and I can't hear you. So, I can't see if you're seeing it or not, but
we can see it.
Okay. I mean, what I mean when I say you see it, I mean, if you're understanding it, if the viewers are understanding this.
Fair enough, Colin.
We'll take time for questions.
I can tell you that I see it and I can understand it.
Okay, because it's amazing. I've been giving courses since 2001, and it's just remarkable how some students grasp it straight away, and others I can show them 5-10 times, and they still don't see it. I think it's just the way each individual's brain is wired. Some people see it quicker, others don't. So I just hope the people watching it are understanding this. But we'll have time for questions in a short while, I'm sure. So just to get back to what's going on here. So you got your second higher low and higher high over there, and you could buy again over there. So as I mentioned, the first two signals I'd like to take, and then just let it run. And this was, of course, a remarkable trend. We just got signals all the way here. We've got another signal there. I'm just drawing that very loosely when it broke that point. Another signal there. And, it just kept going. The truth is, I don't think there's been one sell signal because it pulled back there, which was still above this low. And I would see that as a kind of reset. So you could start again, even though you'd still potentially be holding your core long from over here. You get another one there, another one over there when it breaks that high. And so on and so forth. Here we had a sharp pullback. So from a practical point of view, you'd be giving back quite a bit of profits there, although you still got a massive profit overall. And that's why you could use, when you've had a big run, use like a previous swing low to potentially take profits, or at least take half your profits, which you would have done over there. You could take all your profits because, I mean, the move from there, what did we say, 7,700 and something, up to 12,800 is 5,000 points. It's a massive, massive move on the NASDAQ. So, wherever you took profits along here, you've made a lot of money. I would see that as a reset, and then it starts up again over here. And you can see that's why I actually prefer this on the higher time frames, because the higher time frames are smoother. They're not subject to the day-to-day volatility that you get intraday and even on the daily chart. The higher time frames are smoother. And I also find that the institutions, who are the ones that move the markets, they really operate on the higher time frames. Institutions will gather or accumulate a large line of stock, and that can take them days or even weeks to accumulate the kind of size that they're wanting. And that's why I find that the bigger time frames are generally smoother, less volatile than the lower time frames. And you can just see the kind of money. I mean, you've got to ask yourself, would you make that kind of profit if you were trading off a 5-minute chart over this time period? Maybe you would, which is great. But, it's got to be suited to your personality and to your lifestyle to do that. And you could do both. You could use this off a weekly or a monthly chart, and you could trade intraday off an hourly chart, or I like a 15-minute chart intraday. You could really do both in separate accounts, of course. So after this reset here, you got another Dow Theory buy signal there. And why? And normally I'd ask people in the class, why is that the Dow Theory? I want to hear people actually show me that they're understanding this. And that's because it's made a higher low there and a higher high there. There's your next entry there, 13,100 approximately. Rallies, pulls back. Now, if you could just use what I like to do, if I've got a big run and it's going up like that, is you draw a very tight trend line, and when it closes below there, at least take some profits off. Did pull back. Very worst case, you'd have brought your stop up to break even. You want to protect your break even as quickly as possible. Pulls back and continues up, and this trade's basically still going in motion. This week so far, it's down for the week slightly. We'll have to see where it closes tomorrow and Friday. But if it closes down and then continues after that up, we get another signal there. So that's basically how you're seeing it work on the weekly chart. And for longer term players, you could do this on the monthly chart as well. It's my opinion that all traders should have long-term and short-term trading. I really think it's essential. And I wish when I was in my 20s and 30s and I was playing around and doing high-risk stuff with my trading and trading futures and not really thinking about the long term, that I would have also been doing it on the higher time frames, because one can really accumulate proper wealth on the higher time frames. And it's something that everyone should be doing together with their short-term trading. So if you look at a monthly chart, and this you really just need to look at once a month. Start at any significant low, like there, rallies, you get a pullback and it makes a new high there. There's your buy signal. Rallies, pulls back, that's still above that level there. When it comes up there, you've got another buy signal there. And then you've got another buy signal there. And again, you just need to look at this once a month. There's another one there, and we got another one not long ago over there. That was in May, the end of May. So, I mean, this is starting from there. You would have got in, the signal was at 7,800. So this is going back to 2019 when this started. But you can just see the massive moves you get on a monthly chart as well. And the beauty of this is you only need to look at it once a month. So you can have your regular day job and just look at the markets once a month. Take a look at your favorite stocks or the leading stocks of the day, or the main indices, or run a scan. I'll show you the Paragon Dow Theory scan that we've developed that will find these for you. So that you'd look at once a month. If you want to do it on the weekly chart, look at it once a week. You run your scan on the weekends, or put aside, you probably don't need more than 20 minutes on the weekend to find a few of these. If you're going to use the scanner that I'll show you, you could do it in a couple of minutes. That's the weekly chart, and let's go back to the daily. So that's the daily. Let's try and find a period where the market was in a real clear downtrend, which hasn't happened for a while on the NASDAQ. Let's take this period over here. You can see a downtrend, lower highs and lower lows. So the first signal would have been there. I'm a bit hesitant because the signal occurred so far off the top. I probably wouldn't take that signal. Got a bounce there. If you did take a Dow Theory buy signal there, higher low and higher high, I would place my stop loss below this point here, and you would have been stopped out for a small loss. Not the end of the world. No method works 100% of the time. This method, if used correctly with the kind of additions and the filters that I use, you're probably going to get about 70% winning trades. But the what's far more important than that is that your winning trades are going to be much bigger than your losing trades. And that's really what you want. Your average win will be much bigger than your average loss. So you get a short over the short would be, well, I would actually take a short over there. And let me just take, 1 second, let me just take some of these lines off, because on the biggest swing, you've got an A, B, C, D. I don't know if you can all see that. So it's almost like if you had to zoom your mind out. Okay, on the biggest swing, you've got A, B, C, D. And when it breaks at point B, over there, you've got another short signal. Okay, apart from that, you've got just another regular short signal here, lower high and a lower low. You could short that as well. Another one here. Just keep in mind, the further the trend is in place, the closer you are to the end of a trend. So, the first two you could take, that was already quite far off the high. I would probably just take one more and see how that goes. So that's it there in a downtrend. And that's really a downtrend in the context of, a bigger uptrend or a long-term uptrend in the index. But there are some nice trades that you could take there on the short side as well. And as I mentioned, you could do it on a bar chart or a candle chart as well. So you don't have to wait for the closing price on the line chart. And I've got some other little tips and tricks to use to try and improve the effectiveness of this. And I go into that in the course. One of them is to potentially, you don't have to wait for the closing price on a line chart. If you're using a line chart, you could just wait and get in, let's say, on a short signal before the bar actually closes. And if I go back to the long trades, if you're getting a breakout above that point, you've got a higher low, and if it's trading above there, you can actually get in earlier before the close. It is a more aggressive entry, but very often you're going to get in quite a bit earlier, and as long as it closes above that high, you're already in the trade. So that's just something to keep in mind. There are a few other little tricks that I teach people to try and improve the effectiveness of this. But really, you can see that it's really, really simple stuff. You don't need to go to university, get a college degree to do this. It's you've probably got it already from what I've shown you. What I advise people to do is just open up a chart anywhere and just practice it on any time frame. Right, Jeff. I think what I'd like to do now is just ask people if there are any charts they want to look at. And then I'll also just like to do a scan. Let's just scan on the markets to see if any instruments have given us a Dow Theory buy or sell signal for today based on today's close. And let's take it from there.
Well, first of all, I think you can hear me. I think it's going great, Colin. That was really, really good. We do have a lot of questions that have come in. And so I'm just going to kind of go through them. Let's see. I wanted to know, for trading, what period do you like to use? So he said, what period should one use? But I think that's a very personal question, depending on how much time you've got.
Right.
What periods do you like to use, though?
But it depends. I have short-term and I have long-term trading. So for my long-term trading, I'll always look at what the weeklies are doing. I even want to keep one eye on the monthlies. So at the end of each month, I'll look to see which instruments have given Dow Theory buy or sell signals on their monthly chart. Because I know that if I've got one on a monthly chart, the chances are we're going to get a move in that direction for a good few weeks. And then on the weekend, I'd look for Dow Theory signals on the weekly chart if I'm looking for trades that will last a few days and potentially a few weeks. And I tend to use it on the higher time frames as well as the daily chart. If I've got time and I'm looking to do some intraday trading, then I personally like the 15-minute chart for intraday trading. I'll sometimes use a 2-minute chart, even a 1-minute chart at times, preferably the 2-minute, but that's if I've really got about 2 hours free where I want to do a bit of trading intraday. But generally speaking, intraday, I like the 15-minute chart. The hourly chart's also nice. I guess my main chart is really the daily chart. but I'd never move on the daily chart without knowing what the weekly chart's doing. You really want to know the higher time frames.
This question is also from Prem. He's basically says, I use major primary trends. I use monthly and quarterly and annual charts with volume. That gives me a direction of the primary trend. I use that with daily, weekly to trade. Do you have any views on this?
You know, the different people have different views. A lot of people will tell you, get an uptrend, for example, on the higher time frame, and then time it with pullbacks on the lower time frame, which is 100% fine and valid. The problem is if you start looking at too many higher time frames, you get paralysis of analysis. And what I found with this is that you can actually just use one time frame. The problem is when you use too many, you can actually start getting confusing yourself. I find a time frame that suits your personality and your lifestyle. If you've got a regular day job, then you're not going to be able to trade intraday, unless you're doing it maybe on a say a 2 or a 4 hour chart. To me, it sounds like the question there that he's maybe looking at too many higher time frames, personally.
Okay.
So that would be my...
Edgar, that'd be your view. Okay.
Yeah.
Edgar wanted to know, is it possible to listen to this again? And so I will answer that one because
we are asked nicely. Maybe we'll let him. How's that?
Yeah. We are actually right now streaming this to YouTube, and what will happen is about 1 hour after the event closes up, Edgar will send you a recording. So everybody that's registered for the event, you're going to get a link, whether you came or not, but I assume you're here because you're listening, or you're listening to the recording, in which case, hi too. But you'll get a link to the YouTube page in about an hour. And while you're up there, make sure to like and subscribe. I would ask you to do that too. We appreciate it. It does help a lot. So moving over to YouTube question. Actually, no, a couple more here. Sheehan wants to know what the parameter of the stochastics he's using, and I just told him it was 833.
Yeah, that's really irrelevant. I'm not actually using that with this method. I mean, you could, if the price has had a big move and you're getting a negative divergence on the stochastic, the oscillator, you maybe hold off from taking longs. Like for example, we're getting there's a negative divergence here on the Nasdaq, so we may well get a move down. But I have my own take on how to use oscillators, which I teach. It's beyond the scope of this webinar, but that's something you could keep in mind. If you get a negative divergence, be very careful about taking longs. You might well start waiting for some shorts to line up.
Okay. Going over to YouTube, Mo7 would like you to take a look at XAU equals.
Okay, let's do that. So that's the gold price, if I'm not mistaken. What is that?
XAU, I think is, let's see, it's going to be something against the US dollar.
Yeah. Okay.
XAU.
Yeah, that's what I've got. Yeah, that's what I've got there. This is the gold price, right? I should know. I mean, I look at this every day.
Yeah, that is actually gold.
Okay.
But I think you might have an interest.
Yeah. Okay, so you happy with this? This is the chart?
That's right. That is correct.
Right. So again, I've taken everything off. All the indicators are off. You can just see, and I'll leave it on a candlestick chart to start off with. This uptrend was higher highs and higher lows. The downtrend here, lower highs and lower lows. Now we're trying to work its way higher. We'll talk about that. But this downtrend, lower highs and lower lows the whole time. If I put it on a line chart, which I like to show, you can just see it very clearly, the zigzags, higher highs and higher lows. So to start anywhere at any significant point. So starting at this significant low here, you got your first higher low, higher high there. You can see it's a subtle higher low. Just a small pullback is all you need. You got a higher low, telling you that the sellers have stopped coming in. And when it takes out this high here, we've got a higher high as well. So just remember at the bottom, you need the higher low first to show that the sellers have stopped. And then you need your higher high to show that the buyers are now taking control. So you'll have bought over there, zigzagged up, came down. If you wanted to take a bit of profits after a move, bring your stop to break even, I think that's always a good idea. Pulled back, and you got another one over there. So you got your higher low there, and a higher high when it took out that point there, just 1 cent above that high. And we got a nice run up to there. So you would have bought at about 17.45. It went up to about 17.93 on the closing price chart. So that's already a $50 move in the gold price in about, it looks like about a week or two. Now, I'll have to see if that point is below that point. If it is, there would be a closeout. Certainly, if you're up $50 on the gold price in a week or two, take profits or take half your profits. Tighten your stop a lot. Just draw a tight trend line like that and close it below. Take the rest of your profits. Okay. Now, technically, you'd get a short signal here. You got a lower high, and when it breaks that point, a lower low. I would just use this slightly bigger swing here. Again, I wouldn't take that because the bigger trend is up. So if I just put on a 20 period moving average, you can see it's above the rising 20. I wouldn't be even thinking about shorts, just looking for longs. Okay, so the next one was over here. The next buy signal was over here. And I'm sure you can all see why that's a buy signal. If everyone can't, then please watch this recording again. Okay, you got a higher low and a higher high. Very, very easy and straightforward. A zigzag, a lightning bolt. That's all you want. It's really simple stuff. As I said earlier, the simple stuff works the best. You got a buy over there. The closing price would be roughly there, 1800. Zigzagging up, it's already would be up to 1837 up there, and probably in a few days. You could take some profits. Another buy signal there, higher low and higher high. Another one there, keeps moving up there. So that second signal would be at about 1845. It went up to about 1908 on the closing price basis, and then a sharp drop. So once you've had this big move, you've got to be protecting your profits. So either draw a trend line like that. When it closes below it, just take profits. Use a very short-term moving average, or bring your stop up to each successive pivot low. You'd bring it up to there and take profits when it goes below there. And you've got some really nice trades there. Simple stuff.
You just answered the question I was going to ask you is, do you move your stops up when you get new signals? So
I like to give it a bit of room just to move in my direction so I can see that the trend's underway. And then I do definitely want to move my stops up, certainly to break even as quickly as possible. But then when I've got a nice run, I want to tighten my stop at least to, firstly, I want to actually take some profits I normally use just a certain fixed amount of, depending what I'm trading. If I'm trading an index, I'll take whatever it is. Let's say if I'm trading the NASDAQ intraday, I'll take like a 5 or 10 point profit. Let's say it's on a 15-minute chart. If it's on a daily or weekly chart, I might take 50 points or more. But you want to be taking profits into strength as a general rule in trading. Take some profits, not the whole lot. But then it comes back, goes up again, gives you another signal. I'd move my stop to below this low here.
I completely agree with that.
Simple method will keep you in 80% of this trend. And if you can catch 80% of every trend, you've done incredibly well. Even if you can catch 60% of every trend, you've done incredibly well. And the beautiful thing about this approach is that it's so simple that the people have a tendency to overcomplicate things. That they'll put but they'll put lots of indicators on their charts so that it'll look like spaghetti, and they'll be reading the news, and they'll be looking at what 5 or 10 of their favorite commentators are saying, and they'll be watching the data coming out, working out, should I buy, should I sell? And what I've discovered is very often you'll get a simple signal just right beneath your nose without even realizing it. A nice, simple little Dow Theory buy signal without you even realizing it occurs very often when you least expect it. So it's just simple, and simple just works the best. So just going over to here now. So we've got a close out over there. We then got a Dow Theory sell signal over here. I'm just drawing that loosely again. Lower high there. Can you see that was a very subtle lower high? And now we're looking for a lower low, which was there. below the 20 moving average, just I would take it. And of course, there's a massive drop that we got in the gold price in mid-June. So again, it caught that beautifully. Simple stuff, really nothing complicated. Right now, we've got to move up. It's pulled back today so far. If it comes and gives a higher price above there tomorrow, then you got your first Dow Theory buy signal in the new uptrend. So that's something to keep an eye on. We might get that. But that's basically, that's basically it. You can really do it on any time frame. Let's do it on an hourly chart. Let's open that up. So the reason why, I mean, it works on all time frames, but I do find it works better on the higher time frames, simply for the reason that I mentioned is that they're less volatile. They're less affected by news. I mean, intraday, you get news all the time. You get data releases every day that can affect prices. And that's why there's obviously more volatility intraday. Of course, the intraday timeframes are the building blocks of the higher timeframes, which is also why the higher timeframes are smoother. But you can just see in this uptrend, you got zigzags all the way up. And your first signal would be starting from this low would be over there, higher low and a higher high. Another one there. You'd get a lower high and a lower low there, so you'd close out your long, assuming you didn't take profits already. And then you just wait for your next one, which would be use this bigger swing, A, B, C, D. And it takes out that high, you could buy again. And you'll make money. And as I mentioned, intraday, it's very important to have a filter like a moving average on to trade only in the direction of the moving average. And then there's subtleties that I talk about, which I'm not going to go into now because I think it's not fair for the people that have paid for the course before and who are going to pay if they do decide to buy the Paragon Toolkit and attend the training. It's not fair to them, but there are subtleties about the moving average, the way I like to use it, if I'm going to take that trade or not, specifically or more so for intraday trading. So there's some important subtleties there that will help you get the odds more and more in your favor. But really, we're looking for pretty much high odds trading if used correctly here. And it works. And again, I can say it again and again, the reason why it works is because this is the basic law of price action. This is the way price works universally. It's the way it's always worked since the beginning of markets. Prices zigzag up, higher highs and higher lows, and they zigzag down, lower highs and lower lows. That's just how prices work. And we want to take advantage of that. That's what this method does, just so simply and so easily, that it's just such a pleasure to use. It's just amazing how there's a natural human tendency to want to complicate matters. And if you show them something as simple as this, people almost don't believe it. They kind of feel, well, surely if it's so simple, how can it work? But it does. And I challenge everyone in this webinar to try it for themselves. Open up any chart on any time frame and you'll see how just nice and simply it works. So here's the weekly chart. Again, zigzags all the way up. Let's see, the first signal would be there. If I had to start, actually, no, the first signal would be here because you've got A, B, C. It's a higher low there. And then a higher high there. So it's just zooming out one time frame in a sense. A, B, C, D. These two Bs are at the same approximate level. That one might even be above there to give you a signal. So you'd be buying around there 1291, and you can just see it keeps zigzagging up. You get a sell signal there, lower high and a lower low. And that's at 1490. So that was that's 200 points, $200 on the gold price in a month, or 3 months. Still a big move. And you can just see it zigzags up. It works beautifully. Again, not every trade is going to be a profit, but it never is, no matter what method you're using. On the downswings here, lower high, lower low, there's your first short over there. You shorted there at about 1309, with the close probably about 1305. Zigzags down, you get another one over there, lower high and a lower low. You can enter again, the first two on any trend. This keeps moving down beautifully. What did we say it was? 1305. It came down to 1186. It's a huge trend that you catch on the higher time frame, this weekly chart. And you're going to see that the higher time frames do give you bigger and smoother moves generally, which is why I like them. Right now, we're in a bit of a sideways mess. We've had this consolidation for the past year or so on the gold price. And the question is, are we starting up a new major uptrend? We did have a buy signal over there, higher low and higher high there. Had a nice big run, sharp pullback, and that's why you do want to protect your profit. So if you have a nice run, it got in at about 1750, it went up to about 1898, so call it 1900. So that's a $150 move. That's a $150 move there in about 2 months. You want to be taking at least half your profits, if not more than that. I mean, I'm happy to just take the whole lot, or maybe drop down to a daily chart and really tighten a trailing stop on a swing low on the daily chart. Sharp sell-off here. We're looking for a buy signal on the weekly chart here. Certainly, if it had to take that out, you'd have a swing there, higher low and a higher high, A, B, C, D. But you want to try and get one in before then, certainly on the weekly chart. And on the daily chart, for sure there will be if the price continues up. Okay, Jeff, I don't know if there are any other ones people want to look at, or if I should show them the planning.
There's lots more. We have a lot of symbols, so I don't know that we'll have a chance to look at them all. But let's go for Zaid or Zaid. I'm not sure which is a better way to say that. And YouTube wants to look at the S&P 500 index on a monthly chart.
Okay. Let's have a look at that. So this is the daily, put on a monthly. Yeah, let me just take off the signals there, the writing there. Okay, so this is, you can just see on a monthly chart from that significant COVID crash low, your first buy signal would have been there. Admittedly, it was far off the low, but it's been going up ever since. So that signal was at 3622. It's now at 4320. Massive move. I mean, it might not look like a big move, but on a month, because it's a monthly chart, that is a massive, massive move. You know, it's not ideal to get your signal that far off the low, but it can happen on the monthly chart, and that's why you really want to scan and you want to find your best opportunities where you get your signal as close to the low as possible. Obviously not too close, because that's why I use the 20 as a filter. But that's it there on the candle chart. Let's look at it on the line chart. Okay, so the line chart is pretty much the same thing. You've got your higher low there and a higher high there. You'd have got in a bit earlier, about 3585. And still zigzagging up, you'd have got another entry over there. Higher low and higher high. So again, you got the swing starting there. A, B, C, D. When it takes out that B point, that's your next buy signal over there, 3803. And you're still long. So again, this is a monthly chart. As I mentioned, you can look at this once a month. As I say to people tongue in cheek, you could play golf all month and then just look at this at the end of the month. It's not as simple as that. Don't give up your day job, which is a general rule, in my opinion, for trading. Trading is not easy, and there is a learning curve. And what I try and do is try and impart what I've learned over 30 years of using technical analysis to try and help people, to show them what I feel works the best in technical analysis. I mean, I actually first bought Metastock in 1994. If I'm not mistaken, it was still the DOS version. And I think the first Windows version came out in 1995. So I've been with you guys a long time with Metastock. I use it every day. And why am I telling you this? I've just forgotten why I'm telling you this. I've lost my trail of thought. But yeah, trading is not easy. There's a steep learning curve. But really what I try and show you is what I found the best way to use technical analysis, having used it for 25, 30 years plus. And that's really what I teach people in my courses, is use the highest probability methods, and that's what I try and impart on them. Okay, enough about that. Should we look at another signal, another symbol?
Yeah. One quick question. What is your Mo in YouTube wants to know what your take on placing orders during a counter trend move is?
Trading orders mean trying to catch a counter trend move. Do
you believe in trading against the trend? Is the way I read that.
No, trading 101 tells you don't trade against the trend. You know, the trend is the basis of all profits. You want to trade against the trend, good luck to you. You're going to be sweating all day long, and you're probably not going to make money either. There are very, very few instances where you could fade the trend. You look for a mean reversion move. It's a bit of an art in itself, and it would require a bit of time for me to go into that, explain that when I would maybe consider doing that. But as a general rule, just stick to the trend. Please, I mean, take that, tattoo that on your forehead. Okay, stick to the trend. Write it on your mirror and look at it every morning when you brush your teeth. Don't fade the trend. Trade in the direction of the trend. It's going to save you a lot of hassles, and you're going to make money that way as well.
I heard it was your friend.
Sorry? Yeah, that's right.
Somebody told me that. I've heard it before. How about we have somebody asking for, and I just lost it. Hold on just a second. Okay, Ari was asking about GBP AUD equals. That'd be the pound against the Australian dollar.
Right.
AUD. I think.
Sorry. I typed it in wrong. Let's just see that.
Yeah. I do that all the time.
Yeah. Okay, there we go. Okay, so one of the things, this one's actually got my, this has got my Dow Theory expert advisor attached to it. Obviously, I was looking at this not long ago. That's probably why. And one of the things we've programmed into it is that it pops up a window if it gives you a Dow Theory buy signal, which it's done today. This bar is the price that closed about probably about half an hour ago. So this is already moving into tomorrow's candle. So it pops up a window saying Dow Theory buy, which is quite a nice little touch. What you can do is have a number of charts open at any one time, attach the expert advisor to it. The expert advisor, for those that aren't aware, is this little guy here with a top hat. You can attach your expert advisor to the chart, and it'll pop up a window when whichever instrument will give you a Dow Theory buy or sell signal. So that's a nice thing to have, especially if you're trading intraday and you've got a lot of charts open. You can't look at everything all the time, so it'll alert you to when you get a signal, and then you can decide whether you want to take it or not. Okay, so this is the GBP AUD. A few moving averages there. I'm going to just take some off just to make this just a little bit easier to see. That's a 10. I'm just take this off. This is a 20, and that's, I think, the 200. Okay, so this has just alerted us when some of the signals have occurred. And you can see it's giving a Dow Theory buy signal today. When I say today, I mean this candle here. This candle's probably been open about half an hour. And now, interestingly, if you look at this, let me show you something. That price there went slightly below there. If I just draw that line, you can see just a few ticks of pips below that point. So on a candle chart, it's actually not a Dow Theory buy signal, but on a line chart, which I based the expert advisor on, we've got a clear Dow Theory buy signal there. Okay, higher low and a higher high. Above the moving average, there's your signal. Okay, it did close quite far from the breakout point. So you've got to make a call. Do you want to take it that far from the breakout point or not? And that's just a question of assessing your risk reward, where you're going to put your stop if you do, what is the target potential in the trade. And that's something I would consider by looking at where the main resistance levels are on the chart. If there are any chart patterns giving me higher targets, that sort of thing. And assessing the risk reward ratio, I'll decide whether I want to take the trade or not. Interestingly, it closed above this resistance level here from last October and again in June. So this could be a significant breakout. Based on that, may well be worth taking this trade. And there could be, this thing could go up for a good few weeks. Still plenty of upside potential here. Even if it retraces 50%, you've got a massive move. So this trade may well be worth taking. Okay, so I hope that answers that question. He didn't mention if there's any particular time frame you wanted to look at, but this is the daily chart. Should we move on, Jeff? Yeah. Just while we're here, if I could just show you how it caught some of these shorts nicely.
Okay, go ahead.
Red arrows. Yeah. Okay, carry on, Jeff.
Oh, okay.
All right.
Here's not really a symbol request, but more of a kind of a question. The trouble in trying to find a good trending market on Forex is they seem to go up and down and change a lot. And I don't. In addition to he says that if you're trading on a bit of a higher time frame, you have to have a little bit more money in your account. And he says your advice is very solid. But what is your feeling about Forex markets in general with Dow Theory? Do you have a feeling like they do have a tendency to trend a lot?
Intraday trading in Forex is really dangerous. I personally don't advise people to trade intraday Forex unless it's on a higher intraday time frame, like an hourly or higher. 15 minutes could also work as well. Below there, I personally don't like trading. I just find it much too volatile. You know, for Forex, it's the most volatile intraday instruments that I've come across. So if you are going to do it on a lower time frame, then let's say 15 minutes, just use a moving average to give you a filter and only trade in the direction of that moving average. I find it too volatile there, and I don't use it on that short term. From about an hour upwards, even 15 minutes is okay. It's not bad. Certainly on a daily chart, it's no different to any other type of instrument. Okay.
One more time, I think we maybe have one more time for one more anyway. Well, we're out of time, but I think we can kind of extend it to one more. NASCAR All Out in YouTube would like to look at SQBG.
SQBG, okay. What's a .o probably? NASDAQ stock?
I can find it real quick. Let's see. I've got
sequential brands.
SQB. Oh, did you find it?
Yeah, I've got it. Okay,
I'll stop looking.
Okay, so this thing's been a bit volatile recently. I assume it probably reported or did something, but announcement or something, a massive spike over there. So let's just take these moving averages off so that we can just focus on the price for now. And I want to take some of these things off here. I don't want to confuse you with other stuff. Okay, so let's just go to a line chart, because again, it's simpler, it's cleaner, it's just easier. I don't know what time frame you want, but on a daily chart, this would have to go above here to give a new signal. So you got A, B, C. It would have to go above there to give you a signal. I wouldn't take that because it's just too far from that pivot over there. If we look over here, you've got your A, B, C over there, A, B, C, D, and your buy when it breaks B, that's your buy signal, a nice little run over there. This whole time period here, I mean, I don't even need to draw it in. You can just see the zigzags, higher highs, higher lows. Let me just mention something as well. Dow Theory does not work well during sideways markets. And whatever strategy you use, it's critical to know when it doesn't work, because no strategy works all the time. Generally, trend-following strategies will work well during trending phases. Sideways or counter-trend strategies will work during sideways markets. They won't work during trending markets. You're not going to find a system that works equally well during all types of market phases. So it's important to know when the market goes into a sideways phase, Dow Theory is not going to work that well. However, that being said, I found it actually works better than any other method that I've come across. Even in this general sideways method, you can still see that you can catch very small short-term moves. And when that happens, you want to just take your profits very, very quickly, like after 1 or 2 days. Generally speaking, I would just say save yourself a lot of hassle. Don't trade during a sideways market. In fact, don't trade any method. That's my view. You can see here, though, we had a lower high, lower low, and there's a little bit of a trade to the downside. But when you're in the sideways markets, just draw a line above it and a line below it, and when it breaks out, you can start using it again. So there was a higher low there, higher high. Because it's not as tight here as it was over there, I would maybe consider taking this trade. You can just see that the tightness of the swings over here, particularly here, is not occurring over here. We're now getting more spread out swings, so it might be worth, in fact, this probably closed above this line anyway. You get a move there and another signal over there, higher low and higher high over there. Nice trade over there. That one I wouldn't take because the trend has already been going for a while, but your first 2 trades catch a nice move in that trend. Okay, Jeff, should I maybe just do a quick scan on the the Paragon Dow
Yeah, I think that's a really, really good idea.
Okay, so
And while you're kind of getting ready for that, I'd say if you had charts, because we did have a lot of symbol requests that were just we could be here for a couple of days. We are happy if you have things that you'd like to look at with the expert advisors and your own charts and the signals attached. If you just want to reach out to us at metastock.com/saleschat, we can pull any chart that you're interested in. I always feel bad or guilty that we don't have unlimited time to talk about every symbol, but we're happy to talk to you and show you symbols and send you information and whatever you need. And we do have a lot of time to do that if you just want to get in touch with us at metastock.com/saleschat. Go ahead, Colin. Sorry about that.
Okay, no problem. Okay, so let's go to the scanner, the Explorer. So the Paragon toolkit, which has got really a lot of my formulas and indicators or methods for scanning some of the simple techniques that I teach. So we've called it Paragon. And here are, I think, Jeff, you're probably going to talk about this, but there are about, I think, 6 different explorations and expert advisors in it. And one of them is the Dow Theory signal on a line chart. Another one is where I combine that with what I call Trend Finder, where I look for an established trend and then the Dow Theory signals in that trend. And this Explorer will find that for you. But let's just look for basic Dow Theory signals. What I'm going to scan is maybe just some of the main ETFs that I look at, as well as let's look at some stocks, maybe the NASDAQ 100. I've got a lot of these open, so let me just close some of these down links here. Let's just go to the NASDAQ 100 index constituents. So that's already highlighted, the NASDAQ 100 stocks. And what I like to look at is the major currencies as well. So Metastock has very nicely got the majors in one little list over there. So that's 36 major currency pairs. And, if I'm looking for something, I'd start off with that. If I don't find something there that I'm really happy with, I would sometimes scan the entire NASDAQ composite, which is, I think it's about 3,000 stocks, if I'm not mistaken. And then I'd add a few filters to it, like this share must trade above $15 a share. It must trade at least, let's say, 200,000 shares a day, etc. Just to that kind of thing, just to narrow it down. Okay, so let's just look at these instruments. Let's run a scan on the daily chart. Let's see if anything has come up for today. Today being the close on Thursday, the 8th of July. Okay, so let's have a look. So now it's 173 instruments that we're scanning. Goes through them. It does this in about a minute, maybe even less. So we're almost through it. You can see it's taken 24, 25 seconds so far. Going through each one of those instruments, looking for Dow Theory buy and sell signals. So I'm looking for both buys and sells. Almost done. Okay, so we're done. That's 36 seconds it took to do that. So now you got buy and sell columns. Click on the column, and any column with a 1 tells you that instrument meets the condition. So the 1 is only one has, and that's the VIX, interestingly. Let's click on the sell column, and you can see there are quite a lot of 1s over here. That in itself is quite telling. The fact that there's only one out of all the NASDAQ 100 stocks and a whole lot of ETFs and currencies, only one instrument has given a buy signal and quite a lot have given sells on Dow Theory. That in itself is telling you that maybe the market's in a bit of a toppish phase and might be heading towards some kind of correction. But that's just as an aside. So let me open up the VIX. So the VIX, as the viewers might know, trades opposite to the S&P. So you see it pops up a window that the volatility index has given a Dow Theory buy signal. And if we just go over here, this is the signal here. So I'm going to maybe just take off the moving averages for now, just so that we can focus again exclusively on the price. So this latest blue arrow is your Dow Theory buy signal. And again, it's based on the closing price. So the actual close was up there. If I put it on a candlestick chart, that was the close over there. What concerns me here is it closed quite far off its high, just like the markets today closed off their lows. So just be very careful if you want to go along the VIX. But we've got a classic Dow Theory buy signal here, higher low and a higher high. Again, the close was quite far from there, which I don't like taking those kind of trades myself. And also, as I mentioned, it did close far off its high of the day. So you want to keep an eye on the candle chart if you are going to use it as a line chart as well. So it found the VIX, and the VIX normally goes opposite to the market. So that in itself is a potential warning for the market, something to keep in mind. Let's look at the sells in. Because there were quite a few sells, the ones, let's maybe look at some shorts. Okay, so let's look at Dollar Tree, for example. Let's look at that. And again, because it gave a signal today, it popped up a window. So let's zoom in here. And here it's given us a nice short signal over here for today's close. You've got a lower high and a lower low over there. Okay, lower high, lower low. I like the fact that the moving averages are angling down. It's below the 20. The 20 looks like it's starting to move down again. So you've got a short trade over there. So this is something you could look at shorting. And this instrument has been generally in a downtrend for a while. It's got a consolidation phase here. It may well be starting to, this might be the start of a breakdown out of this sideways box, if you want to call it that, channel for potential move lower. But either way, you got a short signal on Dollar Tree. Let's look at Facebook. Some of the people watching might have heard of Facebook. I think it's quite a well-known app. I'm not sure. I'm just joking. Okay, so here we've got a sell signal on Facebook. It pops up a window. Let's just zoom in there, and you can see a lower high and a lower low. Now, I personally wouldn't take it because it's above the rising 20 period moving average. This red one is the 20. The blue one is the 50. I wouldn't take it, but that doesn't mean that it's not going to sell off further. Just as we mentioned earlier, you don't want to trade against the trend, but you can see it's caught some really nice trades here. So lower high, notice how it made a lower high there, which is very interesting. And today it's closed below there. So we've got a lower high and a lower low. So we may well get more of a sell-off there. Personally, I wouldn't act on that myself. I mean, while we're on Facebook, let me just put it on some of the higher time frames on the weekly charts. Look at this beautiful buy signal over here after the COVID crash. This is just a classic kind of signal that I just love to take. You've got a massive sell-off, and you got a Dow Theory buy signal quite near the low. You've got a higher low and a higher high. So your risk is very low. If you put your stop below here, and you've got a very, very small risk and massive upside reward potential. And I mean, that buy signal, let's say that the close was roughly around about here, 164. Your first pullback was at 211. You got another little signal there you could have added to it up to 235. So, correction there. You want to be taking profits, at least bringing your stop up to the pivot lows, as we mentioned. And pulls back again, and you got another buy signal there, higher low and higher high, and another nice move over there. Here we've had some nice moves, so that's how it's worked nicely on the weekly chart as well. Should we look at a couple of others here on the list? Let's see what else has come up here. This is quite interesting. GBTC, which is the Bitcoin ETF. It's given a sell signal. Bit of a concern this, interestingly, lower high and lower low. So we've got a Dow Theory sell signal on Bitcoin, basically. Something you might want to take note of. Of course, Bitcoin has been in a sideways channel for about 2 months. So I'd personally like to see it actually break support, which is, I think, at about $30,000. But you've got a Dow Theory short signal over there. Let's see what else. Some of the other well-known big ETFs, their sector ETFs. Let's look at Monster Beverage. So it's popped up the window telling you that there's a short signal, and here's the signal here. So you've got a lower high and a lower low. And then we've got a short signal there. It's below the declining moving averages. It's below the flat 200-day moving average. That's a very nice signal to take. So you could short this instrument here, Monster Beverage, MNST. We've had a few shorts along the way as well. And the uptrend, we've got some nice buys there as well. Should we just take a quick look on the higher time frames? Beautiful signal over there after the COVID crash. Okay, another one over there, zigzagging up. Now here you'll note it makes a lower high and a lower low. So fine, you'd close out if you were still holding. Let's assume you hadn't taken all your profits before. You want to take at least half profits on a big run like that. You wouldn't sell short because it's above the moving average. And when it takes out that high, I'd get long again because you've got a higher swing A, B, C, D. A, B, C, and D. So when it takes out that level there, you've got another buy signal at 73 and it shot up to 84 in about a month. So it's just such a help to be able to scan for these things. I mean, I would just not be able to do this without the scanner, especially if I'm looking for intraday trades. I could do this on the 15-minute chart amongst some of the major currencies and indices and look for trades over there. You could literally do it at, let's say, 2 minutes to the end of the quarter hour. Run a scan, see what's showing a Dow Theory buy or sell signal, and then decide quickly if you want to take it or not. So it's just a huge, huge help, and yeah, it's really it's indispensable. I'll show you just while we're at it. Maybe I'll just put on you can also attach an expert advisor through this little, just by right-clicking there. Let's just put on the one where I combine it with my trend finder, which highlights the trend. I'm going to just make this a candlestick chart again. I think it's easier to see. Right, so here, again, we're still on a weekly chart. The blue is when it's in an established trend, and then it'll give you Dow Theory buy signals in that trend. So you can see there, gave a few signals in that uptrend. Let's just drop down to a daily chart. Okay, so this is a more conservative method because I'm looking for an established uptrend, which are these blue candles. And it will give you Dow Theory signals all along the way in that uptrend. If it's in a downtrend, then it's painted like this kind of purpley color, and it'll give you shorts there. That's a nice thing to have if you want to only take your Dow Theory's signals in a very established uptrend. There are different ways of doing it, which I'm not going to go into now, but just to show you how that can help you stay on the right side of the trend. Jeff, I don't know if we should look at any others or if you want to leave it at that for now. Totally up to you.
I think
totally
that's pretty good. We have one of the things I'm surprised by is like the amount of comments we're getting. I think you've done a great job.
Thanks.
Thank you. I was looking for some of the comments, but it's been a very, very good, informative session, and I appreciate that. So I do think it might be a good idea for me to talk a little bit about the add-on, what's included, and kind of the upcoming sessions that we're going to do with you. Would it be a good time to do that? Yeah,
totally up to you. I'm happy to do that. Sure.
Let me go ahead and change the presenter over to me again. I'm going to go ahead and basically show my screen. And what I would like to do, I'm just going to basically kind of just talk a little bit about kind of the package that's included that we've developed with Colin. And this package is it's actually pretty unique. We're actually going to include all of the Dow Theory stuff that he talks about, as well as a bunch of training, as well as kind of a bunch of other methodologies and systems, all in kind of like this really big, massive package. So let's kind of, Colin did talk a lot about the Dow Theory. You're going to go back in and kind of talk about what we call the Paragon Trading Toolkit and everything that's actually included with this as part of the package and the promotion today. So in it, in the actual add-on part of the toolkit, you're going to get basically 6 explorations. And Colin kind of showed you how the explorations work. They basically kind of you can run the explorations. They'll show you the things. I scan every day. I think scanning is one of the best things that Metastock has to offer, because it allows you to take a big list and focus on the parts of that list that actually make sense to focus on. It's going to include basically 6 expert advisors, 6 templates, system tests. You're able to test the trading ideas and see how well they work. And it includes like a 6-module course that I'll talk a little bit about as well. So included in the Paragon Trading Toolkit, you're going to have the Paragon Dow Theory signal line chart. You'll have another system called the Trend Finder 1.2. You'll have the Trend Finder Dow Theory combination, which is a combination. Well, I think it's self-explanatory. You'll have also the key reversal, the MA205 entry system, and the weekly buy setup. So I have a little bit of a definition of kind of what these are in the PowerPoint, and we'll just kind of talk a little bit about each one of them for a second or two. The Dow Theory basically is what we just talked about. It's looking at the higher highs, higher lows for an uptrend, and the lower highs, lower lows for a downtrend. Very, very straightforward technical analysis. The 1.2 is a method that Colin developed. It's created to identify basically whether you're in a bullish trend or a bearish trend. And as we kind of talked about earlier, you should always trade with the trend, and the trend is your friend. And as Vincenzo said in the chat earlier, don't trade against the trend. So the Trend Finder 1.2 basically helps you identify kind of the key entry points of the trend. There's a combination where Colin actually combines the Paragon Trend Finder with the Dow Theory combination. And I'm not going to read the PowerPoints to you, but you're welcome to pause the video and kind of read them if you want. And then there's what is called a Paragon MA205 entry system. And this basically uses a short-term trend, a 20-period moving average. And it uses triggers based on a cross of that and a 5-period moving average. It's basically it's called the Paragon MA205 entry system. And then you also have a weekly buy setup. And this is, as the name implies, intended for use on weekly data. You want to use it with a weekly chart. And the idea is to find a setup that indicates the entry of a multiple week trend. So in addition to all of that, basically, so those are kind of a coverage of the 6 systems that are included, or the 6 methods that are included with Metastock. All of those are going to have matching explorations. They're also going to have expert commentary, so you can go in there and see full English definitions of what's going on in the chart. Any advice that Colin felt was appropriate to tell you will be kind of written out in English. It's a full implementation into kind of like what makes Metastock unique and simple, unique and good to use. It has the ability to signal all the trades for you, tell you where those entries are, tell you what that means, and find them in a big group of stocks. So a very, very useful system. In addition, one of the things that Colin's been doing for quite some time now is he's been running training classes. So one of the things that we did as part of kind of getting ready is I actually went and took a look at the testimonial page on Colin's website, and people absolutely love his training, for lack of a better way to put it. He gets very, very good feedback. And in fact, I think it's just by seeing the webinar and the feedback that we're getting here, I think I know why. Everybody kind of understands where he's coming from, what he's talking about. And if you liked the lesson today, basically part of the Paragon Trading Toolkit is going to include 6 full training classes. So session 1's on market basics, asset classes, charts and trends will be session 2. Session 3 will be more trends, technical analysis tools. You can kind of get an idea that this covers quite a wide range of things. All of these classes are going to be available. They're going to be recorded. They'll be part of your My Downloads page. You could go and rock them anytime. But since we're launching this as a product that's available for the first time, we're actually going to do all of these classes live one time. So if you sign up between now and July 20th, you'll be able to go to all 6 classes live. You'll be able to ask questions. You'll be able to do all that kind of good stuff. So the first session starts on July 20th, and then it's July 20th, 21st, and 22nd. That's a Tuesday, Wednesday, and a Thursday. And then the following week, we start on the 26th. That's a Monday, Tuesday, and a Thursday. And basically, all of the classes are going to probably last about 60 minutes. Today's class was supposed to last 60 minutes, and we're going on an hour and a half. Or they'll probably go a little bit long, but we will allow you to answer questions. I really think you get a lot more when you go to a class live, as opposed to being a pre-recorded class. And I think this toolkit is well worth it, even if all the classes are pre-recorded. But the chance to go to all of these live as they happen and answer questions and get your questions answered and all that kind of stuff will be really, really beneficial. So I'd encourage you to go ahead and sign up for this before the live classes begin on the 20th. So all in all, Paragon is going to include the 6 explorations, the expert advisors, the templates, the tests, and that 6-module course where Colin will go through and kind of talk about everything. I really think this is a very, very good value for everything that you're going to get. You're going to get a full-on Metastock add-on, 6 hours of training, and our retail price on that is going to be $700, $699. If you do it as part of the launch special, we're going to basically lower that price to kind of get you in. We want a lot of people in the class. We want a dynamic group in there. So it's going to be $599 as a launch special. Again, that's going to include the full Paragon add-on, the 6-module training course. And if you don't have a copy of our award-winning Metastock program, we will give you a free copy, or a free trial copy. I should be very specific about the way I word that. A free trial copy with Metastock and data to help you understand why Metastock's been rated #1 in its price category for the last 25 or so years in a row. So this is a launch special. I think really kind of the big drive here, I want to see you there in these classes, and you'll want to sign up before July 20th. So you can sign up by giving us a call, 800-882-3040. You can go to metastock.com/sales-chat, and you can ask any questions that you've got. And you can also go to metastock.com/CAbramsA to sign up. So any of those will get you up there. And I hope to see you at the class. I think they're going to be awesome. And judging from the class we had today, I think they're going to be really good. So 800-882-3040, metastock.com/sales-chat, or metastock.com/CAbramsA. So, all right, I'm just going to see if real quick there's any questions that we have. While I do that, let's see, Edgar, for that question, get in touch with us, metastock.com/sales-chat, and we'll see what's going on with you. So let's see, that looks like the majority of the questions. David says, what a good session. Chris says, great job, guys. Colin, it is actually kind of weird. You got a lot of positive comments, a lot more than usual, I should say. So good job.
Great, thank you.
Coming in.
Thank you. Thank you to everyone for attending, and especially to you as well, Jeff, for hosting it. Thank you so
absolutely.
much.
Great job. Everybody that came, I hope you enjoyed it as much as everybody else says they enjoyed it. But I do want to say thank you for coming. It's good to have you. If you're watching this on the YouTube, do us a quick favor. Hit that like button. It does help a lot. You can even hit dislike. That even helps. Subscribe to the channel if you would. We appreciate the feedback. Colin, thanks for coming. Everybody else, thanks for coming. We'll see you guys at the next one.
Cheers. Bye for now.